Hello, everybody. It is Justin Finn Wealth Advisors. I hope you're doing well. It's Monday, August 5th, 2024. Happy TGIM to you all. I'll tell you one thing, it was not a happy day in the stock market, and markets were routed. Just run out of the building, duck for cover, all that stuff. Worst day in the S&P 500 since 2022. Dow Jones down over 1,000 points. And today was it just intensified selling as the day went on, even into the close. But we have to go back to Thursday, where this fuse was kind of lit and the market started to roll over and really got itself into a lot of fear and panic on Friday with the jobs number. So we had for the month of July, we had the jobs report come out, and that was well below Wall Street's expectation. So Wall Street had an expectation higher that more jobs would be created in the month of July. Only 114,000 were created, and that led to, again, another increase in the unemployment level. So unemployment is now at 4.3%. Started the year at 3.7%. And every single month, this is month after month after month now, we have had the unemployment number go higher. This is not a one-off anymore. This is an absolute trend. All right. Now, how long will the trend last? We'll see. But anyway, at the moment, it does not look like, and certainly the stock market does not believe, that we have seen the worst when it comes to the unemployment rate going higher. So all this stuff is very negative. And then when you have extreme negativity and you get sentiment that becomes negative and fearful and panic, you have days like Friday, and you certainly have days that carry over until today. So since I'm so negative, I might as well I'm going to continue on with I'm going to highlight some other reasons maybe to stay negative. And tomorrow I'm going to do a video being positive. All right. So what is that? I'm going to do today is the glass is half empty. Tomorrow the glass is half full. All right. But since I'm on this negative train and since the stock market sucked so much over the last few days, let's just continue on with it. All right. I hit on the jobs number. If we listen to second quarter conference calls from companies, okay, this is to me the most important piece to gather of information, because you're getting it from the companies and their CEOs and the CFOs, and they're explaining what had happened with sales, what they're seeing from the consumer, and then ultimately, what is their forward guidance, okay? And are their earnings growing to justify maybe where their stock price is, right? So second quarter earnings have been decelerating, just like the economy's been decelerating, okay? And this is across the board, about how weak really the consumer's been. Starbucks, Procter & Gamble, McDonald's, other sectors, it has not been, a good, making you feel good about what companies have been saying, what they're seeing. So that's a negative. The other negative is the price of oil. Oil continues to go lower. That is an indicator of economic activity. So when you really have low oil prices and it comes lower, yeah, it's good for the consumer at the pump, but that also can be an indication of slowing business activity. Okay, that's an indicator. Another indicator is copper. Copper is a leading indicator, and the copper prices continue to fall. So that could be another piece of where stocks are going to continue to go lower because of weak economic activity when it comes to copper. And then ultimately the consumer. The consumer has less money today from an M2 money supply than it has over the last 4 years. And delinquencies for cars are up, credit card bills, debt all-time high. So there's a lot of negativity out there, and it's kind of so bad at the moment, it just kind of rolls off the tongue, and you can kind of keep going. But you put it all in the blender, you mix it up, and it's not a drink certainly that anybody would want to be drinking at the moment. So tomorrow I'll do some, because there is some positives too. As much as I kind of was really down in the dumps on this and about how disappointing everything's been, and some of it rightfully so. Manufacturing, I left off manufacturing. Okay, so if you look at the ISM manufacturing number, 50 is the number where above 50, we're growing. Okay, manufacturing is expanding. Below 50, it's contracting, it's shrinking. So not only was for July the ISM number below 50, it was 46.8. That's the lowest it's been since COVID. Okay, since like the COVID shutdowns. Every economist that predicted that IMS number for July didn't even come close to what that number was. Okay, and then the consumer was, when you looked at the consumer spending in June, was the biggest miss that we'd seen in about 4 years too. So that's, negativity begets negativity, and it compound on itself. And then when you get the sentiment turns fearful, everybody's kind of running to the exits, trying to sell everything at the same time. And then that's when you get fear and panic on the street. What do they call it? Blood on the street. So anyway, I'll talk to you tomorrow. I will be more positive. I do have positive things to talk about when it comes to the economy and it comes to the stock market. So have a good night. I went a little bit over 6 minutes or so, but anyway, hope you get something out of it.